Are you putting off purchasing that new home because you think mortgage rates are too high and home prices are coming down? Well, I think you might want to reconsider that position. I see about a 6 to 8 month window currently that buyers have an opportune time to get into the market rather than waiting. And the reason I think so is because I think we're going to see mortgage rates come down probably sometime in about middle of the year next year, possibly sooner. We're seeing a slight decline now because Fed Chairman Powell came out last week and basically indicated to the market that they're going to be less aggressive on Fed rate hikes, thus signaling to the market that here in December, we're probably going to see about 50 bips rather than the 75 basis points that we've been seeing in the last few months. And what that signaled to the market is that the Fed is taking a little bit of a breather. We're still going to see the Fed funds rate go up. Currently, it's about 3.75% to 4%. We're probably going to see it hit about 5%. But keep in mind that this number does not impact mortgage rates directly. Mortgage rates closely follow, or more closely follow, the 10-year Treasury. And the 10-year Treasury is basically come down on the Fed remarks. And right now, we're still seeing a situation where the spread between the 30-year fixed mortgage rate and the 10-year Treasury is at a high level. Right now, it's about 2.85% spread between the two. And historically, since about 2011, that spread has been closer to about 1.75% to 2%. So right now, with nothing changing, mortgage rates have about 3/4 to a full point that they can come down. Now, right now, volatility in the market and some other things like the Fed exiting their mortgage-backed purchases has driven up that spread. But once we see it normalize, that's going to come back down, back toward the norm. And with that being said, we're going to see, with the rates drop, a spike in mortgage applications. We saw a little bit of a spike recently, a couple months ago, when it dipped down into the fives briefly. And we'll see another spike like that again. And what that means to you is increased competition. Right now, it's not, for say, a buyer's market, but what it is a position where you can go in and have a little leverage to actually get the sellers to maybe pay some concessions or also maybe buy down the rate. That's not a situation that we had a year ago. And I think that if you wait too long, we're going to get back into that same situation where a year ago, where you're not going to have heaven forbid we get back into the situation where people are waiving contingencies like inspections and appraisals. And that's for another topic. But mortgage rates will come down. That means increased competition. That means less leverage as a buyer. And also what it means is you're potentially reaching for a house that maybe isn't something that you would want optimally. I mean, maybe it's not your dream home. And on the largest purchase of your life, that's not something you really want to do. But that's what we saw last year when people were lining up out the door to put offers in. And keep in mind, rates are high right now, but as rates come down, you always have an opportunity to refinance. And I think in about 12 months, maybe 24, you'll definitely have that opportunity to lower that rate. So consider getting in now while you have an opportunity.